So you're thinking your strategy is the reason why you are still losing money in the forex markets. No, that is not it. It is something way deeper. And until you understand this, no amount of new concept or backtesting can save you. Take a look at those setups. They look perfect, right? Everything your strategy taught you is right here. Yet, this trade failed. Now, most traders see this and think, maybe the zone I marked is wrong, or maybe my timing was off. But that's not the real problem here. The truth is, most traders have confused a trading system with a pattern, and that's why they are stuck in the same cycle, winning today and losing the next, and hoping that just one day, everything will click. You see, this same mistake of confusing your strategy for just a pattern is the same reason I almost quit trading at some point. I kept on thinking I was one setup away from success until I realized that the success in trading isn't about finding sniper entries. It's more about finding or building a system that can give those entries within a context. And that realization is what led me to create what I now call PAC, which is my Poppy Joe's Advanced Concept, that gives me clarity and takes away all the guesswork. So let me show you what a PAC trading framework looks like. Over here, we have the higher time frame bias or market context. So normally, this is where we have the part of top-to-down analysis. I believe we all favor doing top-to-down analysis. You can check my past video on that, on top-to-down analysis and how to work your way down and choose a time frame also accordingly. Now, the first place you go to is your higher time frame to build a bias. And mostly, going to the higher time frame is not always going to be about determining the trend on the higher time frame. Personally, when I go to the higher time frame, I do not actually go ahead and look out for trend. In most cases, depending on the kind of strategy or concept I use in getting my bias, right? I can just look at the candles and I get my bias. It's as simple as that for me. And if I also see a trend, I can also follow the trend. Okay, but now let's take a look at this. The first thing is determine the higher time frame bias. And that is just to know where are you currently in the markets. You know, are you in an uptrend? Are you currently in a retracement state? You know, where exactly is the market? Is it in the current, are we currently having impulse? Or we are currently having retracement, or what exactly is happening in the market at that particular time. The next thing is to build a directional narrative. And this is very important because this is exactly where your direction comes in. This is exactly where you form your trading bias, where you want to trade to. Are you buying or selling? This is exactly the point where you get to choose that depending on whatever thing your directional bias or, you know, your narrative is. And that particular one, I always classify it into two. Okay, because if I have my uptrend, my higher time frame here, let's say I have an uptrend on my higher time frame. Okay, so when it comes to forming bias now, okay, directional bias. First, I've been able to identify that on the higher time frame, I have the context is uptrend, a bullish trend. Directional bias now is into two. Either I have the counter trend or the pro trend. Now, retracements are mostly called counter trend. Okay, when you have a pullback, we mostly call it the counter trend. So I will also determine, am I trading the counter trend or I intend to trade the pull trend? Now, this is a counter trend. So you see this kind of pullback, that's counter trend. So am I currently deciding to take the counter trend, or I have to wait for the market to come into maybe a discount level and I take the pull trend? So these are the decisions I have to make on the narrative or on the directional narrative level. Then the third one is the order flow alignment. So depending on what your selection is or your directional bias is, then you have to follow the market structure. Now, I call it order flow. Most call it market structure, but this is where order flow comes in, because wherever market wants to go to, for example, if I'm targeting price going to, let's say, internal range liquidity here, now, I already identified that price is going to go there in the bearish structure, right? It's going to be retracing on a lower time frame with a bearish structure. So that bearish structure is what I will go and follow until price gets to my targets, okay? So that's why I have it as on the medium time frame or the lower time frame. You follow that order flow, align or in alignment to your direction. Do you understand? Or probably if you are trading pro trend now, that means you want to follow the minor structure from this particular place. So your main targets. So the minor structure that forms from that point to your main target is the one you want to follow. So it must be aligned before you now go ahead. And the third one is POI. That's your selection of your point of interest. Because after you determine the order flow and you have the right order flow, you must now know where you want to buy from or sell from, where you exactly want to key in on the trade from. And we have the entry models. Now, this is where most traders miss it. And that is the point of saying you need to have a framework. Most traders start their own from this entry model part, leaving out every other thing. Or should I say, they start from entry model, then they choose POI, then they come back to risk management. The flow is not actually correct, because what they do is that whenever they just learn a particular entry model that says, when you have, maybe we have this kind of entry model, Quasimodo, inducements, and we claim POI, stuff like that. So if a particular trader, now let's say a normal random trader has learned this, he wants to definitely try it out in the real market. So only when he sees something like this, he will just be eager to trade and buy from that POI without any contextual meaning or understanding of what price is doing. So whenever he sees that pattern forming, he just wants to buy. Like, let's assume now price is just approaching this area, this zone. He just wants to buy from that zone because of the pattern he has learned. And that's why I said there's a difference between trading patterns and having a framework or a system that delivers this thing to you consistently. Because if I had actually done this in a different way, that price has given me a certain high as my target, my draw on liquidity, for example, and I now saw this pattern towards that draw on liquidity, then definitely I'll be taking this trade towards my main higher time frame bias and my main directional bias. Okay, so I won't be taking this trade as a pattern, but rather as part of my major trade towards my direction, towards my target. And that's the right way to trade, not just jumping on any pattern and just going ahead to now, from that point, go ahead and now do risk management, trade management, and all that. It doesn't work that way. So this is like a glimpse of a trading framework. And I use that on this particular currency pair. This is gold. Okay, this is actually gold. So on gold, go and check the video I made on gold few weeks back, and I gave my bias on gold, being that I was expecting price to buy from this point. So let's have it here. So I marked this line based on a certain model. On my higher time frame, the narrative is bullish, and price at that moment had already mitigated this level. So I knew that according to what I trade and what I know, this is internal range liquidity. This gap is internal range liquidity. And whenever price mitigates internal range, it tends to go for the external range, which is the high. So this high here is our draw on liquidity. That was my target. So as at that time, I knew so well that price was trading back to that high. So let's take a look at 3 days time frame. And let me use 23 hours now, just to be fast about it. Now you can see from the moment I knew that price was going to buy to that target, and price has showed me signal. That is where the third thing, which is I think that's order flow alignment. You must check is order flow aligned towards your direction, and that is where I go to see this particular structure forming right here. Okay, you can see that that's the structure forming. That's the order flow being up, and if you get it correctly, we have this as a low, this as a low, and we have this as inducements. We have this low as inducements. And then we have everything you see outside there as external range structure, like you know, right? We have all of this as external range structure. So the market built up that kind of momentum and delivered its target to us just as expected. So I was able to capitalize on many gains along the move towards the draw on liquidity up to when price got to the target. And I made a lot of money from it. So this is exactly the flow of how a normal or a professional trader would think. I made mention of something. I said, let's take a look at it. And I want you guys to hold this code very dearly because it's actually going to give you clarity on most things. So I said most traders are looking for pattern to trade, which is a reality we have come to see in this space recently. And professionals build framework, to think with. Now, in case you don't know, you as a trader, you are not relying on your strengths. You are relying on your framework. And without a framework, you will burn out so fast. And that is where majority of traders are always getting frustrated, because when they try based on their own, their intelligence, their knowledge, and it's not working for them, they feel bad because they think they are the ones losing. Whereas what you need to now rely on is your system. Currently now I have a very good trading system. I call it PAC. And that's what I've been teaching and that's what I've been trading. Now in PAC now, whenever I trade, I'm not relying on my confidence or my knowledge. I'm only relying on what the PAC, which is my framework, has said. If my framework tells me now the price is going to this high, I know every other thing I should do towards that high. So if price gets to my target, I'm happy about it because my framework is working. And if price does not get there, I'm not feeling sad that I'm the failure or I did not do it right. I definitely know that what my framework still has an edge to give me my profit at the end of the day. And that is exactly how you think and trade. So now you understand why most traders lose money. It's not because the market is hard, but because they were never trained to see the market clearly. So before you open your MT5 again, make sure you ask yourself, do you have a pattern or do you have a framework? So if you got value from this, make sure you drop a comment and share this with your friends. See you guys on the next one.